Yes, it's only November, but there are things that you can start doing now to make things a little bit easier for you come tax time. Here we have Vera Wright from Bank of Hawaii to talk about things. Okay, so what can we do now to make things a little bit more planned out come April?
Well, this is actually a really good time to start thinking about that. There's still some time to make some adjustments. For example, if you have some deductions that you could take advantage of this year, you can go ahead and you can make your mortgage payment before the end of December, and then could deduct that interest that you pay this year on this year's return. You can also pay your state tax estimates this year instead of waiting until January to make those payments. Any medical expenses maybe you're planning on having done, is this a good year to go ahead and have those services performed?
What about new taxes? Anything we need to take note of?
There is a new tax this year on the net investment income tax. What this is this is a 3.8% tax on net investment income, which includes your interest, your dividends, capital gains, so that's your sale of appreciated assets, including your houses, and also on rents, annuities, royalties, all of that, anything that's not connected with a trade or business.
Okay, so what can we do to kind of minimize that?
Well, I should also mention this doesn't impact all taxpayers. This is for our high-income taxpayers, if you're married filing jointly over $250,000.
Okay.
And what you can do is what you're trying to do is stay below that threshold. So if you can defer income into next year, maybe look at your timing on your capital gains. Maybe you should wait until next year to really trigger those capital gains, or are you far enough below that threshold to go ahead and realize those now? Are there expenses that you can accelerate to offset your income? And just try to spread things out a little bit and try to stay below the threshold.
Most of us don't have that problem. It'd be nice to have, though.
It's a good problem to have.
It's also a time to start thinking about IRAs, right?
This is a good time to start thinking about IRAs because, one, making contributions to your IRAs, are you maxing out your contribution limits so you're keeping that taxable income off your return by deferring into your 401k plan? Or also looking at IRA contributions. Do you want to go ahead and make contributions to your IRA or to a Roth? It's also time to think about your required minimum distributions. Most of those need to come out by the end of the year. And so maybe you want to go ahead and have that go directly to charity so it stays completely off your tax return. That's a real good tax saving opportunity there.
Okay. We do have a little bit of time, so lots to think about. Vera Wright, and I'm Steve Uehara. We'll be right back.